Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, another week. This week we get the inflation data. Should be interesting. I really don't think that the inflation data is going to be too wild, and market's probably going to love that. So let's see what happens. Let's come over and see if they did anything interesting over the weekend. I'm going to guess not. Let's see here. So you can see here in the treasuries, big move down off of the initial news. Big move up off of the ISM number, and basically closed the day unchanged. This is where I had a short over here, got stopped out of it. It was a good trade. It would have been a good trade. Oh well. You know, I was saying that, like, man, it's so frustrating to trade, trade these, like, it just makes you want to quit. I think I do quit. I quit non-farms payrolls at least. These events are just so wild and confusing sometimes. I just don't know if I can trade that anymore. But I digress. A little bit of a move overnight, but we're basically where we were, which kind of coincides with Nick Timoros's note that the report doesn't change anything for the Federal Reserve. All right, coming over to the S&P 500, kind of a similar sort of a thing. They are on a little bit of a run here at the moment, though. Oil coming back down. Does not speak well to the global economy. I continue to see some things here that are kind of like, it looks like we're going into a recession, guys. Gold and silver coming down as well. Now that's interesting because that is not related to any kind of move in the interest rates. And we got copper. So copper has just been on a pretty good downtrend the past week or so. And we get the 6J dollar still about where it was, 102. And then we got Bitcoin. Bitcoin is just doing all sorts of wild stuff. We still haven't gotten the ETF announcement. Everybody told me it was supposed to be last week. What happened? Didn't happen. I don't know, guys. I'm kind of a little bit like, maybe it's not, like, I feel like that the longer this goes, the less likely it is that it's actually happening, right? But maybe it's this week. Maybe it's this week. I don't know. I'm not an insider. We'll see what happens. Anyways, yeah, I took a beating on Friday, and I think I'm over it. I get like super tilted and upset at the end of something like that. But I had an okay weekend. I think that we can move past this. I think though that I am going to be a lot more reserved on non-farm payrolls. Probably also on this upcoming CPI. Unless there's something like really clear in it, right? Like if CPI came out and core CPI was like spot 5, then I'd be like, oh, and I would trade it. But otherwise we're probably just gonna sit on it and be quiet, right? Now that said, I don't know if that gives us a whole lot to work with, because where do we go from here, right? Like I kind of feel like that maybe the current interest rate is about right. Like I think that we should be above 4%, but other than that, without more data, this is a fine place to be. So that means that a lot of the movement that we're going to get and so forth is probably going to be related a little bit more to what's going on in the equities world and so forth. It does look to me like positions are a little bit stretched over in the S&P 500. So I wouldn't be surprised to see a brief pullback of some sort. We'll see. But I think that you might see some of these positions unwind a little bit and the market kind of recenter before making the next big move higher. That's what I'm seeing today. It is a Monday, so... Oh, you know what? We should come over here and just pull up the calendar just so that we're sure we understand everything that's going on. So CPI is on Wednesday and it's on Thursday and PPI is on Friday. Gotcha. Oh, we also have a 10-year bond auction on Wednesday. That's interesting. Bostic speaking later today. That doesn't give us a whole lot to work on. It might be a constrained day. We'll see. Well, probably. I mean, there's probably going to be some leftover trade from Friday, though. So, I mean, this opening range that we've had the past 10 minutes isn't terrible either. So, come around, browse Twitter and so forth, see if we got anything interesting going on. Tell you what, I had a pretty nasty respiratory infection over the holidays, and maybe it's just selection bias, but when I look around the internet, it seems like everybody did. I saw this one TikTok of this guy talking about, does everybody else have like the post-viral cough? I have the post-viral cough. Like everybody has. I wonder if we all just got COVID again, and then, you know, nobody's testing, so we didn't know. You know? Kind of thinking. Where is your LTQ? So are you talking about you want to see like how many you know, orders or whatever are like the last trade? How many orders there was at the last trade, right? So there is an extra column that you can add here in Jigsaw. But I personally don't find it too useful. What I will, so I think one of the things that people like to use the LTQ for is to see, okay, like when they took that price like were they sweeping a big order, or like what happened there, right? But what I do is I just watch it over on my, you can't really see them. Where is it? Oh, I don't have, I should make one. Here, hold on a second. Hold on a second. There we go. Let's see if that, there we go. Okay, yeah, so here where my picture usually is, I have all of my consolidated tapes, right? And I can see that sort of stuff, especially if it's a big one, right? Because the you'll see like a teal order come through. So you can see here they tried to clear it and it wasn't quite enough. Right? So I just don't use the LTQ column, to be honest. I've had people tell me that they have edges based on that, but I've never found one. I'm not aware of any such thing. Hey Uzi, how you doing? Have you been around all the past week, or were you just, or were you gone? Because it's interesting you pop in like that this morning. Because I was wondering with the next time somebody was going to ask, "Where's Uzi?" and he'd be like, "Oh, I'm still here. I'm still here." Matt Welsh, large language models in the end of programming one. I haven't seen that. Oh, getting rid of your new car payment fast. That's funny. Oh, so what did you end up getting? Did you just replace it with another Mustang, or? Oh, but you got a 24 Mustang. Oh. Was it just which trim? Have you seen this Mustang? I don't think it's come out yet, but apparently Ford is putting out a $300,000 Mustang this year. Like, what? So I've been like, microphone is not high enough today for some reason. I've been looking around at cars. I am not going to buy a car anytime soon, but when I say not anytime soon, like I think it's going to happen 3 to 4 years from now. So I think that the next car that I get will probably be a 2024. I'll just be buying it when, you know, in 3 to 5 years when they're a lot cheaper, right? And so I've been looking around at all of them, and TikTok has kind of picked up on it. So now I'm driving around looking, you know, noticing the cars more often. And I went to the grocery store yesterday, and there was I think I've seen this one before, but there was one of those Porsche SUVs. I don't know if it was a Macan or a Taycan or what it was, but there was one of those, and right next to it was like an RS Audi. And then all of the trucks in the parking lot were like the super decked out ones. Because I'm realizing now, like, the difference between like your base level Tacoma and the nicest Tacoma is like, you know, $30,000 to $40,000. So I'm going through here, and I felt like that guy, or not that guy, but you know, in Gone in 60 Seconds, when he pretends to be this character Roger, and he goes into the Ferrari dealership and he complains about how he saw a bunch of Ferraris at the Starbucks, and he's decided that there's too many people in this town with too much bloody money, right? Like, that's how I felt. I was like, where are all of these expensive cars coming from? Where are all of these? Okay, there's a story to it. I got a base package, which is light years ahead of my old one, but I don't need much. I'm not a Mustang gang, but also don't like change. So I basically replaced what I had with a brand new. Okay. You know, there is, I don't know. I'm noticing that the cars coming out in 2024 are particularly nice. Like, I haven't seen one that was like a real dud, you know, especially in the looks department. The only one is the Mazdas. I've always liked the Mazdas, but I just don't like their current look, man. So, like, really curvy and everything. And I'm sure that it's sleek and sexy for a lot of people, but it's just not my thing. I preferred their 1980 kind of look. But I have iPads for a dashboard. Oh yeah, what I find funny is that, like, what counts for a good entertainment center is having the entertainment center thing being big, when it's like, I don't really feel like the applications and what you get in those are very cool anyways. So, like, why would I need a huge dash? Why would I need a huge control panel, rather? This isn't... But I didn't realize how well I had done with the car that I have. Because I have an Acura TL. It's like a 2008, 2009 model. Still going strong. I was trying to find on it how many miles it had, because I know it's over 100,000. But I haven't driven it a whole lot since COVID, you know? We drove it really hard, and now I hardly drive it at all. I haven't had any problems with it. I do kind of need to replace the side mirror, since the plastic on the outside kind of got beat up. But other than that, it's really good. And maybe I might repair it and give it to one of my kids to go to high school. But, that's the vehicle that I'm looking at replacing. And, getting an equivalent car that has a good stereo in it, that has a sub, is really hard. That's all I care about. Next car, I want it to be 4-wheel drive. It still needs to have a good sound system, and that's about all I care about. I don't think also my next car, I don't want it to be big. I would rather get like a compact 4-wheel drive sedan than like a crossover or a SUV sort of thing, right? I already got the van. So I don't wanna mess with that. I want a compact car that's small and nimble. So I'm just now noticing this big old fat order at 18.5. How did that get there? Because, okay, it was put there at 6:39. There was a click when it happened. I tried to think of something different, but I had to get my car. I had my car for 14 years. Oh, geez, wow. Yeah, and see, that's part of my thing is when I'm looking at stuff, I'm always looking for, like, what is the thing that is of nicer quality, but everybody has missed? You know? That's I think the 10-year treasury is like the perfect example. The 10-year treasury is actually a really, really great instrument to trade. You do get decent amount of movement. It's very economically sensitive. There's tons of liquidity, so no matter what's going on, you can still trade it. Big tick size is a big plus. There's lots of things to like about the 10-year treasury, and yet everybody trades ES. And so I can sit here and feel superior about myself by saying, haha, see, I trade the 10-year treasuries when everybody else, all these fools, they go and trade ES. Right? I'm always like that. I want to find the higher quality thing that everybody's missed. It's my contrarian nature. And so I want to do that with a car, but then I go out there and I'm like, people in this town just have too much money to try and like set yourself apart with a car purchase. You can't do it. I'm sorry, I've got the post-COVID cough. I'm gonna hack a little bit here. Yeah, I don't think I had corona because I never got a fever or anything. So like yeah, and the thing about this one, about this respiratory infection that I've had, is not a lot of pressure. Like, I've been able to breathe through my nose pretty much the whole time. There was like one day where I could kind of not breathe through my nose, but the whole time I've been breathing through my nose. But what will happen is I'm just blowing out a lot of snot. I'm just so much green. That's another thing, is that like normally it'd be like, you get a lot of green out in the morning and then it'll kind of clear out throughout the day, and you know, because it takes time for that chemical to build up. The green is apparently something that your body creates, trying to get rid of it. But it's just, you know, I it'll just stay green all day. In a place with too much money, the way to set yourself apart is to drive it cheap. Well, that's what I want, is a cheap hatchback. But the thing I'm kind of holding me back from getting the hatchback, like a sporty hatchback, is, you know, I do want a quiet, luxurious ride. I don't know. I guess the thing is that what will meet my future needs the best is probably a truck. So I probably end up getting a Tacoma, but we'll see. The new trim, they showed the top level trim on the Tacoma this last week, and it looks awfully nice. Let's see here. The drawdown stat on NinjaTrader Stat Analyzer is closed position drawdown and not equity. Plus, there's no easy buy and hold benchmark to compare with NinjaTrader. Oh, yeah. So those are a couple of good points, Woo. So I have found that if you really want to go deep into the back testing hole, that there's a couple of things that you kind of want to build on your own to help you. So for instance, make a buy and hold Like make a strategy that is just I buy once at the very beginning and then I hold it through the whole thing. Or if you must, if you must close your position overnight, have it buy at the very beginning, close at the end, that sort of a thing, to be your comparison for long only, right? Another thing that I've noticed is the Sharpe ratio. The Sharpe ratio that it gives you is based on a risk-free rate of return of 0. So, if you want to get like an accurate Sharpe ratio for today based on a 4% ratio, for instance, you're gonna have to put that in there. And it's like a property that you just changed. So like, it's something that could be changed from within the backtester, but it's not. So you have to make a NinjaScript property in your strategy to make it available to you, right? There's another one, which is include history and backtest. If you're going to do an optimization run with like thousands or tens of thousands of iterations, including the history, like really screws that up, because it's trying to save basically every iteration and all of the trades in memory. It's too much. So you got to turn that off, right? That's another one that I found. So now in terms of like intra position drawdown, which is an interesting metric. That's not one that I've ever thought of before. One way you could look at it is take my maximum drawdown that it shows, and then take my maximum MAE and kind of guesstimate it like that. You could do it that way. Honestly, though, I think that if you get in like super serious, you probably want to move over to backtesting in your own kind of system with Python. No, I should probably turn the music down a little bit. There we go. Anyways, what was I talking about? COVID? Yeah. So I don't know if it was COVID, because I remember when I got COVID, it was like a fever. I didn't get a fever, so I don't know if it was actually COVID. But I caught something, and it seems like a lot of people are catching whatever the thing is. Like, I kind of wonder if the bug that's going around is a novel bug of some sort. Let's say it's a serious bug. Maybe it's just the flu. But it's the flu, and it's going around, and like just as many people are dying from it as died from COVID, and so they're kind of ignoring it because they don't want people to realize how deadly just, seasonal cold is. You're looking at some Python backtest packages right now? Well, to get started, you probably don't even need a package, though, I'm sure there's stuff out there that help, though. Especially if they give you all of the stats that, like, NinjaTrader does. Because that's one of the things that I find a lot of people are missing, like... especially when they do on TradingView, I just find that you don't get all of the stats that you need on TradingView. I've just accepted the fact that my odds of dying from a government-funded oopsie has gone up 1,000-fold, and it's just whatever. Well, it really bothers me that I continue to see this thing where there are people in power right now, and when I say like people in power, I mean like they've held a job at, the health organizations, or for decades and decades, sort of a thing, right? And when they make a mistake, you can't admit that you made a mistake. You can't talk about what you've got to do better. like we just have to gaslight the public because the most important thing is that the public trusts us and buys everything that we say 100%. Right? That really effing bothers me as a contrarian, because I'm always going to go in and look. Like if the government comes in and says something becomes a big deal, like relevant to the markets. I mean, the only reason why the whole COVID thing is relevant to us is because of the effect that it had on the economy, right? So when that stuff starts happening, I'm going to start reading the studies and all of the information that there is, because my job is to be as informed as possible. So doesn't matter if it's the government or anybody else. I'm going to look at the raw sources and look for information that is maybe being, like undervalued and so on and so forth. So I'm always going to see that, and ergo always going to be on the other end of the ire of these bureaucrats that they just want you to just, do what they tell you. I get sick now and I don't think about it. I must have slept on my elbow last night because it's a little inflamed. I have a bone spur over there. How do you trade with order flow? Well, it's interesting that you phrase it that way. Because, listen, it doesn't matter how you're trading. It's super, super effing hard. 90% of people trying to do it will fail with it. And trading with order flow is really, really valuable, but it's probably like the hardest way to trade. So I think that a lot of people come in with the idea that I'm just going to learn the order flow setups and how to read order flow, and then I'll be a successful trader because of that. But that's not really the way that it works. You're going to need every little bit of help that you get. So we incorporate order flow, we incorporate informational inefficiencies that we know about the market, we incorporate information that we have about positioning and CTA strategies, like anything that we can use to predict the orders. And then when we see the orders on the DOM, we can interpret and kind of understand what's going on because we understand the order flow. So that's the way that you got to look at it. When you're learning order flow, like understand that the goal with learning order flow is to understand what is actually happening in the market at this time. What is the real situation? Because other data doesn't tell you that, right? But in terms of like pure setups that you get that are really effective with order flow, those are really, really short time frame, and you're probably not very competitive with them. So you're going to need to combine order flow with everything else that you know about the market to have a chance at success. And even then, like us, I haven't done very well the past 3 months. And that has been because I've been behind the curve on being informed. I guess I was kind of right on Friday, but I wasn't able to execute it correctly. It's a competitive market. And on Friday, I was found lacking compared to, whatever the large institutions were that were executing that. Do you have any suggestions, things I'm looking for? Optimization, portfolio analysis, and the equity drawdown? Well, so one of the measures that I've seen from quants that I want to look into is called probabilistic Sharpe ratio. So it's a Sharpe ratio that takes into account like probabilities and fat tails and things like that, so that you can you get because you can kind of game Sharpe ratio, right? So this is a way of like getting around gaming it. Otherwise, I think that what the stats that NinjaTrader comes with are good enough generally, and the only other thing is just like looking at the trades individually, maybe making a distribution histogram of a certain thing. Like NinjaTrader has those MFE, MAEs, but you can take those charts and you can turn them into a distribution histogram. Yeah, you got me thinking about government. I mean, the thing that we have to say about this, right now there's heat in the Red Sea, and that's like a third of all global trade. Now, most of that trade is going to be goods from China coming into the EU. They claim that they're only attacking Israeli boats, but at some point, I would think that they're going to go and hit the Houthis and put a stop to that, but they haven't. And there's been some interesting, like, little issues here and there where, like, they tried to set up a coalition and the European nations weren't into it or something like that. Like, there is a real problem. The Biden administration is having a hard time getting people to cooperate, right? And here again, the environment is such that it's like, you can't question it. You can't, they don't let you know what's going on. They've decided that they know best and that it's better that the public just not know what's really going on. And I find that frustrating. But the price of oil keeps going down, so this is another one with like the economy. I tell you what, man, when you start reducing interest rates, usually you're going into a recession, right? The 2008 crisis did not start with the housing bubble being, destroyed. It was the Federal Reserve had gotten too tight, and they were already starting to reduce interest rates and everything. They thought that they were going to achieve a soft landing too. Now, I think the probability in this situation is that we do achieve a soft landing, but everybody just treats it like it's a far gone conclusion. And everything that I know about markets and the way that these things go says that we should be super concerned about this until the soft landing is actually achieved, which means that we've reduced interest rates back to a normal level, and then we haven't touched interest rates for a long time and everything's fine. If not, starting to raise interest rates again because the economy continues to be strong. But Janet's out there saying, we've achieved a soft landing. If you question these numbers that are coming out with non-farms payroll, everybody's like, they would never fudge the numbers. Well, I'm not saying that they're fudging the numbers. I'm just saying maybe this number isn't very useful anymore. Basically, I feel like it's harder than ever to be informed. Is how I feel. I feel like this year it's been harder than ever before to be informed about what's going on in the world. That's interesting. So the Treasury did come down there. They didn't get all the way back, and now it's coming back up, and it seems like it's moving pretty quick there. I'm not seeing anything like on Twitter. Carriers are entering into agreements with the Houthis to avoid attacks, says Red Blocks Global. What? Is that what's driving that one? Maybe, oil is selling off here, though. That's super interesting. Oh, yeah, the defense secretary. Well, with that one, apparently the White House didn't know for like 5 days, and that's why they didn't tell us. That one's wild, too. I mean, maybe it's just a generation sort of a thing. Like, as a millennial, I kind of have to assume that whatever's going on, that it could potentially become a widespread thing, right? Like, I did not trade well on Friday. There's a possibility, although extremely remote because nobody cares about me, but there's a possibility that like me losing on that day goes viral for some reason, right? It would suck. But like, I know that's a possibility, or I've long accepted that, and I just do my thing and try to ignore what other people are doing or saying. But the boomers that are still in charge right now, they're not used to having anything questioned, and they're not used to it. And so what it seems like what they do is they just try and hide. I need to remember to breathe deep. Breathing deep can help with that inflammation that causes that post-viral infection cough. Whoa, Apple Vision Pro will be made available in the US on February 2nd. You know, I think that would be hilarious. I don't want this to happen, but I think it would be hilarious if, because Apple puts their Apple Vision out, that all of a sudden VR becomes a big thing. Because I've tried VR and I didn't really find it that cool. Okay, there was like that kind of movement there, but it's slowed down. I do think that may have been related to the news that carriers are entering into agreements directly with the Houthis to avoid attacks. I think they're trying to turn it into a only attack Israeli vessels, which would become like a de facto embargo against Israel. This story is probably not over, but I also don't think that that is a vote of confidence behind the current administration's ability to get things done and fix the problem. So that headline is a little concerning to me politically. You know, some selling in ES. So that jump, there might have also been a jump in ES because of that Apple news announcing when the thing would go on. I don't think that that'll actually make a difference to their bottom line, but I can totally see people reacting to it, so. Twitter fairly quiet this morning. And that's another one where it's like, you know, Twitter was a good place to find information. Not as much information on Twitter anymore. Let's see here. What's with deal with that 8,000 lot on the bid in ZN that keeps moving away from the market? Is that common to see? So, let's see here. It moved from originally 18.5 all the way down to 16. So it was originally here and it moved down to here. What are you talking about, G-Wee? We were just talking about that big order down at 16, and I was just pointing out to the person that asked in Discord, it is a weird event to see that big of a lot with the, I mean, like normally when we're putting up 2,500s to 3,000s, a big lot would be like 5,000 contracts total, you know. So to see 9,000 contracts at a price is really weird. But then also when you see a big lot like that, those big ones usually don't move. So to see this one have moved several times until it went down to 16 is a little unusual. But there's no way for me to know if it matters or, you know, what it's gonna, there's no edge to that. But something's definitely going on. And I find it really weird also that it's here on a Monday where, like, doesn't look like they have a whole lot to go off of and the market is relatively quiet. Jordan's King Abdullah, Israel's brutal war creates a generation of God. Yeah, I'm sure. The situation in Israel is not over, I tell you what. I don't know where this goes, but people are still talking. And you got to wonder at what point do they stop talking and do something. with the way that the market is going, you know, it's kind of acting like there's something going on under the surface. Usually in the treasuries, if there was really something big going on, it would have already moved. Do you see a slight bias towards the long side, though? In the treasuries, at least. Much more consistent than in days past, at least. Probably, though, if you get in, it's going to be a slow mover and you might, you know, get a decent amount of excursion against you. And, source told Bloomberg that Costco bookings to Israel will end next week. That's not Costco, but Costco, their shipping company. There's a lot happening on this story this morning, isn't there? Oh, wow. You made what? How did you make that much on a ZB trade? Do you like hold it over the weekend or something? That makes me immediately, my immediate thought is you probably did something you shouldn't have done, huh? Nah, well, that's pretty leveraged then, because that's not a huge move. With 6 lots? Why are you trading 6 lots all of a sudden? Well, stay focused if you're still in the trade, right? Hasn't hatched yet. Oh, you got out? Well, then good job. Good job. Now we can congratulate you. Okay, here's the one that I'm going to want to read here. Conservatives blast Mike Johnson's total failure in spending deal. Mike Johnson faced backlash from his conservative colleagues on Sunday after announcing that congressional leaders had reached a tentative agreement to fund the government in 2024. Critics argue that the agreement's nearly $1.66 trillion price tag brings the spending in line with the deal struck last year between Joe Biden and McCarthy. Johnson noted in his letter that the deal's spending levels will not satisfy everyone because the agreement didn't cut as much as some Republicans had been demanding. However, the speaker said the deal provides Congress a way to move the process forward and reprioritize funding with the top line towards conservative objectives. I feel like that conservatives are asking for things that they're just not going to get unless they're winning elections and control the House and the Senate. I think that your focus should be on winning elections, not on, and getting better people into office than on trying to haggle with the Democrats over something that you're just never going to win on. Haggling them. But that's going to be because there is a debt ceiling problem coming up, right? I think that the drop dead date is like February. So we'll see how strong these Republicans are if they're able to blow this up or not. Well, a tick or two back. I don't know if this is... Well, that big order down there kind of gives me putts. If like all of a sudden we got a strong trend, it went right down to 16, then we'd all be like, we should have just gone, the big order was telling us exactly where it should go, But with the information that we have right now and like past behavior, that's not a good trait, Still, still have the S&P 500 open, so I'm sure there'll be a little bit of movement when that happens. You're still shaking. If that makes you shake, you probably shouldn't be trading that big of a wad. Because that was only like that's only like 4 to 8 ticks, right? That's going to be like most trades if you're trading that much size on them. Today looks like a day where you scalp ES for 1 point to make 3 points. Yeah. Well, who knows? The treasuries look a little bit tight. Will that result in the S&P 500 being a little bit constrained as well? I guess we'll see. So it was a one time. Did you accidentally, like, why did it end up being, was it just an accident that you got it on 2 instruments at the same time or something? I mean, I get having a scary trade workout is a good thing because that's training your body to be able to handle the pressure, right? But it's also kind of a sign that you're maybe trading larger than you should be. You know, I don't want to lose more than... I'd prefer not to lose more than 5 to 10% on a day. You know, what percentage of that is your portfolio? So, you know, like a normal move should be more like less than 1%. So are you trading a $100,000 portfolio? You know? So how many times, what was your stop on that? How many times can you hit that stop and still survive? Can you lose that trade 50 times in a row and still trade? Back up to another 2 ticks. I'd still say there's a slight upward bias to this. Catching a good spot would be hard, but does seem to be a slight upward bias to it. Designed as a one-time event. Okay, so then what was so special about this situation? I'm gonna find it. Something's I kind of get the impression you're doing something you shouldn't here. I'm gonna tease it out one way or another. Cortisol does not allow us to be a good trader. It doesn't help. It doesn't help. There's definitely something to, you lose, you get more cautious. It makes it harder to be successful. The more you lose, like it has the psychological impact losing has on you makes it harder to win. Oh, okay. Now you're really starting to scare me. It was because you had a fight with your girlfriend? Why would you? Because she says you're wasting your time? It's a hobby. It's a hobby. I could be a car tuner and be wasting hundreds of thousands of dollars on cars. Depreciating the asset. Would you prefer that? My wife doesn't care about that sort of stuff, but if she was started giving me shit, that's what I would say to her. There's much more expensive hobbies we could have. Oh my, here's a Reddit thread. Change my view. Unrealized gains should not be taxed. Well, I agree with him. I can't imagine what people are going to try and argue here. Let's see here. To change my view on this point, I believe I'd have to see a rational method of calculating unrealized gains that can be universally applied that does not have the pitfalls I mentioned. Easy. Tax the unrealized gains at every time when subjective gains is used in collateral for a loan. This alone stops the largest set of loopholes that allow ultra-wealthy to ignore taxation. You can also lower or exclude this tax for loans used to reinvest in a company. You know what? I have a different view on that. I think that you should not be able to use that sort of stuff as collateral on a personal loan. I think that if you want to do something like, I want to buy a house, that you should have to sell the stock and buy the house. Seth is ticking down. Is that me? Is it me that made it go down? I don't know. Listen, there's a slight upward bias. If I was going to go long, I think I'd do it right here at 23. I'm not confident in that as a trade, but, you know, it's a decent price. It's right next to the VWAP. Flow has been long today. Do you show live trades in your live stream? I do. I don't take as many trades as probably most other people that you're going to see streaming do. I think that most people, I'm a bash on other people. I'm gonna do it. I can't help myself. Most people are trading noise. They've completely bought into technical analysis, and you want to take a ton of trades to realize the stats over time and all of this sort of stuff, right? So they're going to take tons of trades, and then everybody in the stream wants to try and follow their trades and so forth, right? I'm not about that. From what I know about markets, and I know a lot about markets, unless you have a real explicit edge that gives you a high probability of knowing what's going to happen. If you don't have that edge, then your long-term expectancy is 0. You're going to lose everything that you put into it. So we only want to trade when we really think we know what's going to happen. And sometimes there are days where that doesn't happen. So there are days where I don't trade. I'm waiting for a situation where I know what the future orders are going to be, or I believe I know what the future orders are going to be at the very least, right? So I took some trades on Friday, took a pretty bad losing day on Friday. So if you want to see me lose money, go watch last Friday's stream. Not looking to follow your trades, just questioning the validity of traders. Oh, okay. So from that perspective, here's what I would say. Okay, do not look at the performance of the trader as a way to verify the legitimacy of what they're saying. Look for empirical evidence, right? If I say something about the market, how do you verify that that's true? You notice that most of these guys that are out there talking about things are saying things that, in a way that it makes you seem like that there's actual real evidence out there, right? Like, I have this setup and this is a probable setup. That should mean that I should be able to like backtest it and show you that like 60% of the time it goes up or down or whatever I say it's going to do, right? But then, do they actually have that empirical evidence? Have they actually done that study? And I think you'll find that if you were to try and test it, you would have a very hard time trying to test it. And that they always put things in a way that you can't really test their claims, or at least we're not advanced enough yet. Whereas if you go in my videos, I think the video series I'd encourage you to watch is the order flow video series. If you just go to the channel front page and you read that, everything about that is stuff that you can verify. So the stuff at the beginning is kind of more like, this is just what happens. I'm not giving you stats or anything like that. But then the last 2 videos, I give you the stats about how the market actually behaves. And there are peer-reviewed studies that I'm getting this information from, right? So everything that I'm teaching you is backed up with empirical evidence. So that's why I would say I'm worth watching and I'm worth listening to, is because I give you empirical evidence, not because I've made millions of dollars from it or anything else like that. And I would argue that like verifying things yourself using the market data is the only way to really do this. Like, the market is very statistically efficient and very competitive. So some sort of setup or edge that everybody knows about isn't going to be an edge. That means that you have to be able to look at the market, look at what's going on, and see a place where there's an edge that not everybody else has. And you have to be able to do that on your own, which means that you need to have the skills and tools to be able to do that kind of statistical analysis on the market, or to be able to, get all of the information about informational inefficiencies, news that's out there maybe is not properly reflected in the current price of the market, so that you can actually find an edge, right? You have to be able to do your own primary research, essentially, right? There's no shortcut, essentially. And it's understandable, because the way that humans work is we're social learners, right? Find somebody that's the best at this and then copy them. That it's not the same thing when it's a competitive endeavor. Well, they had a decent little run there, but it's coming back to the 23 again. Yeah, wouldn't that diminish the edge? Isn't exposing your edge a way to make your edge go away? Yeah, it is. Absolutely. So the things that I'm telling you are things that are empirically proven. And as such, there are other people out there looking for these edges. Yes. And so I'm giving you like verified information. Is that going to give you an edge? Probably not. But what it does do is it gives you a foundation, right? Now you know the things that we can actually prove about the market. Now you kind of know where to look, and you know how to look, because you know you can learn how did they find these edges in the first place, right? You kind of have to build that base understanding. Now, the other side of it is, like is talking about informational inefficiencies. So there can be information, news, economic reports, all of this sort of stuff, current market positioning, etc., that is not accurately reflected in price, right? And so there are situations where we as individuals can come in and see what the future orders are likely to be, and that there is a clear imbalance and take a trade. Okay, they aren't every day, but and it's hard and it's different every day, but you can find them. And so because that's the primary edge that I'm looking for, that's not something that you can ruin because it's different every day, right? Another thing that I would say is that on the technical side, these things that, you know, are empirically backed, we believe that they occur because of the structure of the market. It's not because of like human psychology or anything like that. It's because the very rules of the game, the way that a limit order book works, causes these things to happen. So there will always be somebody out there making money off of that. You might not be competitive with it, but there's always going to be some HFT making money from that, right? So at the very least, you don't want to trade against it, right? Okay. Maybe they're going to go. I don't know. It's kind of sitting there on the edge, like maybe they could break out. I'm getting a lot of level 2 changes is kind of what gets me excited that like it's going to break out, right? I guess I can do it on the sim here. Very profound answer. Well, that's so interesting you use the word profound. I want, because it makes me feel good. I'm like, oh, okay, you like that answer, but I didn't come up with this shit, right? But that's what's so great about it is that there is information. Wow, that little scalp there worked really, really well. Take the other contract off right there. Okay. You know, it's like these are like fundamental questions about the market basically that have been answered, and for some reason the retail traders haven't picked up on it, you know, because they are profound, I guess you could say. Or a better way of expressing this is, once you've gone through that order flow video series and you really understand it all, and then maybe you go and you read the sources that you get this information from yourself as well, you know, you realize how important it is to why the market is the way that it is, in a way that kind of contradicts a lot of what retail traders think, right? Like retail traders think people tend to do the same thing over and over again, and their psychology will always be the same, and so I can detect patterns and take advantage of it because of that, right? But what we find out actually is that the market is just very, very sensitive to new orders. Like every little thing that goes into this affects the instrument, and so like any kind of pattern, it gets washed out very, very easily. So if you want something that's actually going to be consistent, it has to be based on the structure of the market, right? And it also, the other consequence of that is that you get a market that is very statistically efficient, but not very informationally efficient, which is to say, if you go through and you do any kind of statistical analysis, you're going to have a hard time differentiating the market from a random walk. But when you, any kind of a fundamental measure that you come up with about what the price of something should be based on all available information, the market will never equal that price. The market will always be too high or too low. When a piece of economic news comes out, it will always go too far or not far enough. But it is profound because it will completely change your approach to trading. Nice trade. Well, yeah, it looks like I probably could have let that last contract ride a little bit, but I was not looking to make it right. I was just looking to see the breakout. Now, the 5-year did breach new high there. There is a high. Oh, it's 28.5. Okay, so this is still kind of like an area that there might be some resistance. There was like a spike. I think that there was like a stop run there and then some selling back the other way. So it's not over yet. The best part of this stream is when someone set Seth up on a rant. Well, that wasn't the rant. That is like the pre-prepared speech that we have almost every day. I have this CQG app and there's, I don't know. So you're connecting to CQG directly from Jigsaw? That seems wrong. I would first thing I would do is I would check like all your settings, like reset your Jigsaw settings to default and see if there's any difference. Okay, so there's still some selling in this area, but they're holding this 28 pretty well. So there's probably a liquidity hole at 28. We'll see. I don't exactly know why they jumped up here. There wasn't like a piece of news or anything that pushed them. The only reason why I took that little scalp was because I could see the pressure was up all day and it was like a break of the high. It's kind of a little bit of a gamble. I took it on the sim instead of live. That shows you how confident I was in it. Let's see here. The business is indeed very competitive, and any statistical edge we as retail can find is probably fleeting. The only TA that I would think work is long-term trend following using some pattern. Well, yeah, so we can talk about that because I've been learning about that sort of stuff, right? I think one of the key kind of contributors to why retail traders believe so strongly in technical analysis is the Jack Swagger books. No shade to Jack Swagger. I don't know if this was his intention or if he even understood this, but you know, one of the big things that happened was the turtle traders, and he talks about the turtle traders, right? Where these guys, he taught a bunch of people, okay, there's this setup, doesn't win every time, but that when you do catch one to run, it'll just really run, and then that will make most of your profits, right? And this was like long-term trend following. That's what convinced everybody technical analysis works. Okay, well, that whole story is true, and that did work. But the problem is that we misunderstand what that strategy was. So what was that strategy? Well, it was you look at a commodity on a daily basis, a daily, weekly, or monthly basis, and based on certain triggers, you enter long or short. And you're doing that across a wide variety of instruments. So you're not doing it on a single instrument, you're doing it on a bunch of different instruments. Because the issue is that you can have a market like a commodity that just is sideways and doesn't do anything for years, right? But there's always some market that's trending at that time. And so what the system is doing is it's catching the one that's trending at that time. And it's using technical analysis to do it. But it's using a very high time frame technical analysis, right? It's doing it on daily bars, right? So that worked tells you absolutely nothing about if I come in and I try to trade a single instrument using technical analysis on an intraday basis. Will that work? Well, pretty much that's what everybody's trying to do and everybody fails doing. So I'm a little bit skeptical about if you actually can. With pure technical analysis, that is. Maybe if you were a robot, you know? So long-term trend following, yes, there is some edge, but you have to be trading universe of stocks and you're trading on a daily basis. Yeah. Which is why we should just start a CTA trend following managed futures fund. I'll run it. You can all be my employees. Split up, you know. Well, that trend. So there was a little bit of a liquidity hole at 28. They have pushed through a little bit further. Okay. There was a Bank of England auction there, so this action may be related to that. But that was a lot more than I was expecting. So if you look there and you're like, oh, you could have, you know, you took it off too early, Seth. Well, you know, this thing has really surprised me. I think there was a lot of luck to me getting that, because there, you know, if there was nothing to it, it would have, you know, not gone, would have reversed right there. I've had that happen to me many, many times. I'm not seeing anything as like news either, by the way. That big old fatty order down there is still there. So something that's kind of on my radar now is that we're really, really close to a big round number at 112 even. So that might kind of help them push a little bit further. The volume that I'm seeing here, though, is a little bit much and mixed. And don't see a real catalyst for why they breached the high, per se. So I'm really cautious about it. If I connect to CQG directly, I can use NinjaTrader charts. I don't understand. So with CQG, if you want to use Jigsaw, you would basically either have to connect Jigsaw to it directly or connect NinjaTrader and then use the bridge to send it over to Jigsaw. Now with CQG, I don't think that there's a whole lot of people doing that because, you know, basically you have to be using NinjaTrader brokerage to use NinjaTrader for that. You might be able to get away with it if you're using demo version of NinjaTrader. So it kind of depends, like, are you using CQG Continuum or are you using like CQG through AMP Futures or something like that? That kind of would change things. Let's see here. Joseph Wang, slowing inflation implies a few cuts, but slowing job growth could justify several cuts. This post suggests today's Fed would more highly value employment over inflation and thus may react strongly to slower job growth. The election might matter too. So the lag on the bridge is like literally one frame. So let me explain how this. So when you understand how the bridge works, you'll understand why there's a lag and why it's trivial. So what happens is the .NET framework. This is something that Microsoft made for C#. And what the .NET framework was created to do was to allow you to have like part of the application be written in C++ and part of your application written in C#. Because C++ you have to manage your memory so you can do like really, really fast stuff with it. And C# uses a garbage collector, so it's for things that aren't as concerned about being highly performing, right? Okay, so in order for those two in order for like those two sites to talk to each other, they basically have to have a shared memory location. And so because of that, you can kind of abuse this feature and use it for other things. So for instance, you can have two completely different C# applications, and they can share the same location in memory. So one application will deposit the piece in memory, and then the other application will pick it up, essentially. So it's going to put it, on one cycle, it's going to put the data in that memory location. And then on the next cycle, the next time that your application goes into that queue to look at what new data it has received, it will go in there. Okay. So like the difference that you'll see is literally going to be one cycle. So if you put it up, like if you screen record it, for instance, and you have CQG connected directly to Jigsaw. Sorry, let me start over. You have CQG connected directly to Jigsaw, and then you also have another CQG account connected through NinjaTrader and using the bridge. You will see one frame difference. No matter, like you could have yourself being recorded at like 144 frames per second. And you'll just see like one frame difference, probably. So the amount of lag that you're talking about is uber tiny. If your feed seems clearly lagged, quote unquote, there's got to be something else going on. Makes sense? So I would be more concerned about like, what is my processor usage when these things are happening? Do I have my settings set up where I'm updating too often and my system can't handle it? That sort of a thing. Do I have too much stuff open in NinjaTrader that is slowing the system down because of NinjaTrader? Oh, Citrus has to go. Well, let me read this other comment. What did he have? What I try to go for is scalp in trending markets, and if the market seems like it won't return, I just keep the position. Yeah, no, that's what I try to do too. But I try and trade a single instrument and know everything that's going on in that single instrument, and then only get on when I see a situation that's going to cause a real trend. I guess we could have gone long at 23 when I pointed it out that like if I wanted to go long and I was confident in it, that would be the spot. It would have worked pretty good. You could have made probably almost $30 on it, in fact. But that boost up, that breach of the highs is like quite strong. I'm a little bit. It may have just been a stop run, but it's kind of on the edge of maybe there's more to it, right? The only reason why I would... So if there was like a big change in cumulative delta, then I would really be like, wow, something must have happened that I missed. But when I come over and I look at the cumulative delta in ZN, can actually see that it's flat through this. That there was actually points where there was more selling than buying. So that kind of makes me think that it probably was a stop run. No way to know for sure, of course, but... Forex Live asks, is Boeing stock a buy? You know what? They've had so many problems. I don't know if I would touch that stock. S&P has been relatively constrained, but maybe they're going to reach out through here too. Sorry, breakout. Maybe the ES is ready to break out. Well, there's a new high at least. What do you mean by lag is about 8 ticks? So here's another thing that you might see is like, I'm watching it and I have them next to each other, right? And I see the level 2 change over here. And then I see the level 2 change over here, right? And it seems like there's a pretty decent time difference between when it changes here and when it changes here, right? Well, level 2 changes are kind of filtered by the data provider. And so you won't always get them in the same order. And that can cause differences. So 8 tick difference between CQG. Well, but how much is a tick? He is saying that I see 8 transactions come through before I see it come through on this side. And then something's wrong. You're probably running too many things. You're probably running too many things in NinjaTrader. So what you should do for this is pull up your NinjaScript output window, right click, and go NinjaScript utilization monitor. And then look at what is using time. Okay, so they're breaching out again, and there was a decent volume on that. It hasn't like broken out, but they were trying. So I can see here this Sim22 Delta V4. You know, has some problems, let's say. It uses more time than it probably needs to. Same with the candlestick chart. I mean, that one should be like probably the highest, right? But I've actually made one that was less, so. I actually should go in and mess with that. That's something that's been on my list for a really, really long time. You got to go to like, okay, let me start over again. You go to the NinjaTrader control panel, control whatever you call it, control center. You go new, NinjaScript output. And then you get this window pop open. And then on that output window, if you right click, you can see NinjaScript utilization monitor. I also talk about that in my NinjaTrader tips and tricks video. Election year, typically a bullish one. You know, this is an interesting thing to me. It seems to me like everybody is convinced that the powers that be, whether they be at the Federal Reserve or the World Bank or the Democrat Party or who, I don't know, but the powers that be have decided that Donald Trump must be defeated at any cost, and ergo, we must try and make the economy look as good as possible to reduce the chances of him winning. It seems like that's the hypothesis that everybody's working on, and I don't know. It's a conspiracy theory, you know? I think that things are set up to be a good year, though. Okay, I'm hearing stuff from People's Bank of China vows to promote financing costs to stabilize and decrease. to use reserve requirement and other tools to boost credit. So I think you may be seeing a rise in the treasury. That could have been the rise in the treasuries, is that like all of the guys in China caught wind of what was coming and they said, that's more free money into the system to buy treasuries, and so they bought treasuries with it. Octavius, you've been sick. So is it the same respiratory infection that everybody else has, where you produce tons of mucus and after it's done you continue to have a cough? Isn't most of China well, yes. But that's kind of why that's significant, is that the market has felt that China has not provided enough support. And so any kind of thing where it's like they're going to change course and provide more monetary support in China is a big deal to them. And what ends up happening is, if there's more money floating around out there because China is printing money, a lot of it finds its way over to treasury bills in the United States. And so you see things move up. So could be that they were front running this China news. No way for me to really know for sure. There's a bunch of different things that were going on. I do kind of feel though that this trend is a little bit more than just like a stop out, right? Octavius says, yep, you spit crap out all day. Yeah, it'd take me a long time to get over it, man. It's nasty. See, I'm still coughing stuff up, but there's like, it's just like white. There you go. Financial juice to People's Bank of China to guide banks to accelerate over-the-counter bond market development. Did the recent Japanese earthquake affect markets any? Yes, they did. Well, it's a very brief, but when it happened, I did see movement in the indexes. Yeah. It was kind of funny because, like I saw it come over on the news squawks, but it wasn't something that people really talked about. The market had like a really brief little, shifted a little bit, but it wasn't a very big long-term impact. No. Well, now that they're only one tick away from it, it really seems like they're going to get the 112 even. After that, I'm a little bit like, they continue through that, then we've got a really strong trend coming through here. But maybe people are coming down into the Federal Reserve is definitely going to cut in March. I think at this point, I'm leaning towards they will cut in March. I think that my initial assessment after non-farms was incorrect. I think that they will cut in March, but I don't know if they'll really be able to do more than 3 cuts this year. I think that when you see the cuts in March happen, that you'll see so much fluff come into the market that they'll almost immediately have to stop. They've been stuck right there at 13, 13.5. Pretty tight, though. Okay, there's 112 even. Yeah. So when they say 6 rate cuts are priced into 2024, that basically means 1.5%, right? It means 6.25% cuts. So 1.5% total. Yeah. This is where it kind of gets to, I don't know how much interest rates below a 10-year below 4% makes sense, but like they're definitely gonna touch it here. We'll see if they flow through today again or not. This is starting to look like, if we come back on a volume profile chart and get in a little closer here, kind of put things in perspective. Well, you're getting to some of the prices from before the so this was non-farms. They declined that day, but then we're kind of getting back into that range from the day before. And maybe they want to come back into this area where they were before, like 112.16. Suppose if I was looking long term, but I'm still a little bit skeptical of this trend's ability to keep running. So far, it's been a much larger trend than I anticipated, for sure. Because we broke out at 25, right? Took a little scalp and took it off at 27. It really went. Could have made more than 40-50 bucks. I would be super stoked. I should have taken that trade, man. Well, but I'm still back to, I didn't really think that flow like that was going to come through, so would have been lucky. I suppose if I'm really getting enough auto correlation and everything, I can justify taking a purely technical trade like that, though. The Fed knew the whole time job numbers have been BS, so they could. You see, like, it just comes back to this whole thing, which is, we're making the economy look rosy for Biden's sake. Okay. I don't think they knew. I don't know. The stuff that I see, like my story about going grocery shopping and seeing way too many nice cars out in the parking lot, kind of just brings me back to, kind of seems to me like the economy is both stronger and weaker than it appears. It seems like the upper middle class are just like doing so well with this, and everybody else is still reeling from the inflation. So the reason that people are unhappy about the economy isn't because GDP isn't there, but because they're still feeling the effects from inflation and because housing is unaffordable, right? People are probably going to be unhappy about the economy as long as housing is unaffordable. So could be a long time. But some people are doing well. Well, I'm starting to see some behavior at 112 that kind of looks like things balancing back out, like, you know, long and short saying, okay, we've come up to the spot. Let's just exchange and take our positions off. And we are right at 4%. So that would be like a really nice spot to stop and just chill for a while. Like, we could trade around 4% for a few days. That would be fun. So Alligator says that the rise in treasury to me looks like it's related to oil because oil declined. And that is true as well. There was, especially the spot where we broke through, oil kind of like took a real dive there. But this brings me back to, why is oil dropping so hard? How, if we're going to have a good year and the economy is going to look good this year, how does oil continue to drop the way it is? Still seeing relatively large transactions happening up here too, by the way. I'm a little concerned about oil, man. Oil, I think is the best example of maybe you can't actually pull off the soft landing. Because if we're going to pull off a soft landing and the economy is going to continue to grow this year, why is oil not showing that? Because oil is showing, oh, you guys are going into a recession? Okay. That's true. Oil and gasoline are two separate things, and in fact, a famous spread called the crack spread is the difference between oil and things like heating oil or gasoline. Basically, you buy the crude oil and you sell the things that are made from the crude oil. Well, how much time do we got left? Oh, we still got 40 minutes. The activity level in the treasuries has really died down there. So did you notice how when we were coming up there was lots of level 2 changes? So that's kind of the way that I look at it, is like they all line up. I've been seeing pretty consistent order flow to the market buy sell imbalance long, right? They're all lined up, and I'm seeing lots of level 2 activity. Then I usually like to try and go for the breakout. Doesn't always work out, but did that time. And now that we've gotten to it was kind of pretty active all the way through here, but now it's a little bit more quiet. Now we get earnings season starting here. What's this about Fed's Logan? Buried on Saturday morning amid the hubbub of politicians and media scrambling to signal their virtue over the third anniversary of January 6th, Dallas Fed President Lori Logan dropped a couple of tape bombs that suggest Powell and his pals are worried about more than just jobs and inflation. Oh. Notably, prior to joining Dallas Fed last year, Logan was heavily involved in the financial plumbing of the Fed's policy mechanism as SOMA manager at the New York Fed, and so her views are going to carry a lot of weight on the FOMC, and the two subjects she discussed point to potential financial stability concerns. Her first point can be summarized as a concern that liquidity is draining too fast. What's their second one? Does it tell me? Financial conditions are too easy. Okay, let's see. While there is still more than enough liquidity in the financial system, she said, individual banks could start to see constraints. Speaking at an event in San Antonio on Saturday, Logan said now it is appropriate to begin discussing the parameters around a Fed decision to slow the pace of its balance sheet runoff. In my view, we should slow the pace of runoff as overnight reverse repo balances approach a low level, Logan said. referencing the Fed's overnight reverse repurchase facility, a place where counterparties such as money market mutual funds can park excess cash. Normalizing the balance sheet more slowly can actually help get to a more efficient balance sheet in the long run by smoothing redistribution and reducing the likelihood we'd have to stop prematurely, she added. In other words, if we slowly ease back on the removal of liquidity, then hopefully it won't cause total market chaos and force us to switch to QE and save the world again. Even Nikki Leaks thought her comments were noteworthy. Okay. Indeed, she was probably one of the driving forces behind the surprising mention of slowing quantitative tightening in the minutes, which prompted Deutsche Bank strategists to warn that quantitative tightening will end for one of two reasons. The Fed is cutting rates in response to recession, in which case quantitative tightening tends to avoid having its tools work at cross purposes, or reserves fall to a level the Fed judges necessary in its ample reserves regime. Deutsche said the Fed's preparation for the end of QT is prudent because the rapid overnight reverse repo drain recent repo market pressures, avoidable uncertainty around reserve demand, and readings from the last senior financial officer survey point to elevated estimates of ample all support a turn to this planning now. And more significantly, Deutsche Bank strategists expect the Fed to be cautious managing quantitative tightening this time, given how the last episode ended. Yeah. Furthermore, the Barclays' Josh Abbott expects the Fed to act sooner rather than later. Rather than risking a spike in funding rates as happened in 2019, we expect the Fed to err on the side of caution. This argues for stopping QT sooner, with bank reserves perhaps still above $3 trillion and some lingering balances in the reverse repo. Stopping early allows the demand for reserves and currency to grow into the size of the Fed's balance sheet. Eventually, the Fed will need to resume expanding its balance sheet through asset purchases to accommodate additional growth in these liabilities. So we've warned a few times recently, March is rapidly approaching, and two potential catalysts could be behind Logan's concerns. The BTFP bank bailout facility is due to expire in March, and given the fact that the facility is spewing out free money via the arb of reserves, the Fed will have some awkward squirming to do in order to maintain $140 billion fund. And two, the Fed's RRP facility is due to hit zero in March. And when that date comes, bank reserves will be hit directly as a source, and that means risk off. Logan's second point can be summarized as this: financial conditions are too easy. While Powell was more than happy to talk about how great it was that the market was doing the Fed's job for them in October, he was absurdly quiet about that fact. Since he uttered those words, financial conditions have seen the fastest and greatest loosening in history as yields and the dollar decline in November-December. You get that little tickle in your throat, man. And nothing's coming up. Okay. That is a problem for the Fed, as conditions this easy could rapidly morph into creating animal spirits and a rebirth of inflation. And that is exactly what Logan is worried about. If we don't maintain sufficiently tight financial conditions, there is a risk that inflation will pick back up and the reverse progress we've made. Man, I apologize. We're reading about Fed's Logan and her comments on Saturday. Well, I got a little bit out, but it was just all clear. So, is she the bad cop to Powell's good cop? Over the past few months, long-term yields have given back most of the tightening that we saw over the summer. We can't count on sustaining price stability if we don't maintain sufficiently restrictive financial conditions. In light of the easing in financial conditions in recent months, we shouldn't take the possibility of another rate increase off the table just yet. And then they say we have already seen those exuberant rate cut hopes being reduced. Her comments prompted a significant push wider in dollar swap spreads, which had already jumped dramatically last week following the slowing of QT in the minutes. Signaling fears of liquidity issues ahead are growing, as Logan admitted. The emergence of typical month-end pressures suggests we're no longer in a regime where liquidity is super abundant and always in excess supply for everyone. Ironically, gold is lower today after this dovish messaging, but crypto is rallying. Well, I'm getting a rally in gold now through the regular session, so. Kind of reversed some of the overnight declines, at least. You have to really zoom in to see it, but. I do not use the bridge because I use a similar method through Rhythmic. I've used so many tissues. I went long Georgia Pacific and Kimberly Clark. Yeah, I've gone through a lot of my supply. Let's see. Well, look, it's still going. Now this is interesting. I'm seeing a lot of volume come into oil here on this decline, on this rebound. The treasuries pulled back and then went higher while we were reading that too, by the way. Okay, so what I do is I have Rhythmic Trader Pro, and I connect to Rhythmic through that, and then I connect to Rhythmic inside of Jigsaw, and there is a plugin mode, which is basically doing the same thing as the bridge. So I'm using the bridge from Rhythmic Trader Pro to Jigsaw. That's how I can show you, because I could open this up and I could open up a let's see here if I can find one. What is their window for oh, here we go, order book. And then I say ZN. Okay. Oops. And I hold it right next to this here. And you'll see they're pretty close. Now, if we like recorded this and you went back frame by frame, you might see that this one changes one frame before this one. But they're both pretty quick. So, you know, this reminds me, remember that big old order down at 16? Still there. Still there. You know, people typically say price will move towards the large liquidity. That's not what happened today, was it? They kind of did briefly and then they ran away from it. This is still going, man. I wonder if this is or if the market is starting to read this situation as far more dovish than we realize. Yeah, it's a 6K MBO, yeah. And you could see it in my market depth tape as it was moving around, because it was originally at 18.5 and the 6K moved down slowly until it got to 16. So really, really weird. But by the way, on this up move, it's been pretty strong, like absorption and pushback, like all the way through this. Okay, let's hear it. Saudis lowered the official Arab light oil price by $2 this morning, which led to a fall in WTI. Quarter one oversupplied in spite of good economic context and Middle East concerns, says a lot on the market balance. I see. Okay. How do you use the charts? So I have to connect. You can connect to Rhythmic also through plugin mode. I don't know if I can show you the settings here or not. There you go. So if you added a new Rhythmic, it's all kind of like grayed out because I already have one set up. But you see how there's this plugin mode? You use the plugin mode. Now the problem is that your normal license for NinjaTrader does not include Rhythmic. It includes Rhythmic for NinjaTrader brokerage, but not Rhythmic. So this method basically only works on a demo account. No, do not. I'd have to pay $100 a month to get the MBO data. Basically, it comes with the Rhythmic, I forget what they call it, but there's like a pro version of the data. And it gives you MBO data and it gives you direct access to, right? If I was going to run a market making algo, then I would probably buy that. I just want to use CQG with Jigsaw and use, well, then the best way to do that would be through the NinjaTrader bridge. But what I would say is this: if you feel like you're having lag, is like go everything to the most basic. Close everything, every chart, everything that you have open in NinjaTrader. Start a new workspace. And then just add a market analyzer with the bridge on it. Okay. And then open up Jigsaw and just have like one DOM open, right? And then see if you get lag. If you're still getting lag after that, then you really got something wrong. You also got to check things like, like if you go Control-Shift-Escape, you get the task manager, and then you can come over to the performance tab and you can see like what is your CPU usage, for instance. Octavia says hero trade. What, you're gonna fade this? Dude, on Friday I tried the hero trade and got destroyed. I was right in the end, actually, but I got destroyed on that trade, man. So pissed. Still mad about it. I'm still mad about Friday because it was my like read on the market actually wasn't wrong. It was just the timing was off, right? Clearly rethinking it all today though, because I am kind of starting to realize, okay, so this story that we had just read from Zero Hedge, I think that makes things make a lot more sense. It's like they're concerned about the reverse repo facility draining out and there not being liquidity anywhere for anybody. And how do you continue to roll off the balance sheet? Well, you're going to have to pause. You're going to have to reduce interest rates a little bit and pause the rolling off of the balance sheet. Give things a little bit of a chance to recover before you start doing that again. I don't know if 6 rate cuts make sense, but you know, why would they be doing it in March? For sure now I'm really coming around to the idea that they are going to cut in March. Raymond says no problems with DTN IQ. So DTN IQ was really good when I tried it. The problem I had with DTN IQ was that when the volume was really flowing through, it would like dominate processor usage. Basically, like it would run at a higher priority than everything else, and that would cause my stream to like skip. I would like start skipping frames whenever that happened. So DTN IQ was not feasible for me. I could probably try it again now that I have a new computer though. New computer, and I have the encoder on the chip. Maybe DTN IQ would work better now. Because I'm not going to say that Rhythmic is the best, but IQ feed is a lot more expensive, right? Well, this one is giving up those gains a little bit more readily, but it could just be a pullback. I do find the volume cumulative delta here a little bit off now, because you can see like throughout the morning, but what really before we started trading, there was a slight upward bias. This is why when we were in here, I was like, well, I don't really know what's going to happen, but I think I'd be biased long. That was the primary thing driving me to say that. Okay. So we moved up. There was these big moves like this, right? Changes in cumulative delta where there's bigger, but there's been buying and selling on it. Then we got this gentle up through the flat area. Eventually it sold, and then we got gentle up again. So they keep getting ramped higher. It's not actually a really consistent move in cumulative delta. And then I come back here and I look at like, okay, what about in the 5-year? Nope, that's not either. In the 30-year, there was a much more clear buy, but throughout most of the move, still pretty flat. So that kind of suggests to me that they're reacting more to something else. Right? But, well, the Japanese yen moved with that. The dollar moved with that. So while Alligator is talking about oil, and that might be a driver too, I'm kind of starting to lean towards the market. The truth is coming out essentially, like what has kind of been on the radar for the past 3 months. Not that I didn't know about this, but I didn't see it as big of a deal. Now we're getting some hints from the Federal Reserve and so forth. Cat's out of the bag, and everybody's kind of going, quantitative tightening is going to pause here. If they continue on the current trajectory, they will cause a recession. Hence why they need to cut rates in March. And that's probably giving the treasuries an overall upside bias, but it doesn't look like they're directly buying the treasuries. It looks like you're getting moves in currencies and in correlated instruments instead. Could be good for Bitcoin, though. Has been good for Bitcoin this morning, at least. Bitcoin's been spiking and doing some wild stuff, actually. Asset managers start fee war over potential spot Bitcoin ETFs, says the Financial Times. Okay. Think they'll come back to 112 even? So, I gave that rundown through the cumulative delta and everything, but now you are seeing the cumulative delta turn down in CN. And it's pretty much like at regular session lows, which is very, very curious. S&P 500 is rallying hard here this morning. I shouldn't say hard, but 25 points is not bad. Well, let me come back on the volume profile to ES. Aha. 4760 was the high of the day from Friday. So I have found in my writing and my speech that I like to use like introductory qualifying kind of statements too much. Like I said, treasuries seem to be selling off a bit now that ES is rallying hard to Friday's high. Selling off a bit now. I've always used phrases like that. And I wanted to say treasuries seem to be selling off a bit now that ES is rallying hard to Friday's high now, though. So I use it before and afterwards. That's how strong that is in my brain. We need to work on that. So that story from Logan, Fed's Logan, is important. But don't think that is what caused this breach here, you know? Oh, wow. They reversed right back up to the highs there very, very quickly. Very, very quickly. Now, do I see anything else that's doing that? Not really. It is the Treasury on its own that time. Trying to keep a close eye on this stuff here. I think Bitcoin was definitely spiking there off of that story about a fee war with the ETFs. But I'm a little suspicious of that story. I'm still stuck at, you guys all said it was going to happen last week. So Wow. Yesterday, someone bought 26.9 Bitcoin on Binance and then sent it to Satoshi's dead wallet at the same time, losing $1.1 million forever. Wow. I hope that was intentional on their part, because, geez. Was that a new high? No, that was equal still. Okay, they are all lined up again, though. Well, it's been working all day today, and it's definitely kind of got some of the trademarks, except for not on the cumulative delta side. So I don't think I could call it on this one. I'm not even going to take it on the sim, but there's definitely a level break setup right there that we could take. See if there's another stop run through 04 or not. That would be a pretty, this is an impressive move. If they do another stop run through here, then it's really like, wow, today's going to be a trend day after all that. You say lag is still there with only one thing in it, huh? And how do you tell that there is lag? Are you like, you have a NinjaTrader DOM up and the Jigsaw DOM up next to each other? Yes, okay. So, assuming that you have nothing else running, that very much sounds like a potentially a PC problem. So, first of all, you know, like open up that Jigsaw or the NinjaTrader resource utilization monitor thing to make sure that you don't have extra stuff running that you don't need. And then, you know, Control Shift Escape and look at your resource utilization and like how high is your CPU usage normally when you're seeing this lag. Brando says it was a good day. Did you take that? I feel kind of left out because this is definitely a move that I could have taken advantage of and it didn't. But I just did not see that trend coming at all. Kind of sucks. I don't know what I got to do to get myself out of this rut, but I feel like I've just been behind the curve so much lately. You know? I think that understanding that the Federal Reserve is kind of concerned about the reverse repo facility draining back down is a big help. Okay. What about your memory usage? How much memory do you have? So 20% with only one DOM running is a little concerning. What's using all of your CPU? Yeah, especially if NinjaTrader is only using 2% and Jigsaw is only using 4%. What's using the other 15%? You're using 50% of your memory. So that's also slightly concerning. Yeah, using 50% of 16 gigabytes. Well, okay, so is your web browser using all of the resources? So now you got to start going through like all of the performance kind of things. So like I've found that having a lot of tabs open can result in high memory and CPU usage by your web browser that's unnecessary. So like close every other application. We're going to be ending here in a second anyways, so you can shut down your web browser. Like close everything. Download Malwarebytes and like run that to make sure that you don't have any viruses running. Download a DPC latency checker and check your DPC latency. You know, like I would go through all of those things because that you have a couple of little things that suggest to me a resource problem on your machine. Okay, so New York Fed 1-year inflation expectations just came out. There was a little bit of a reaction to that. We do have in 30 minutes an auction, so I'm curious to see how that goes. But we won't be around for it. I don't know what to tell you. I want to shift a little bit, guys. I want to be spending a little bit more time working on long-term edges, playing the market from a long-term perspective. I feel like I understand the short-term market about as well as I'm ever going to. Of course, if there's a piece of research that's new or something that I'm missing, then please send it my way. But, you know, I'm kind of going higher time frame, and I you know, shifting my focus a little bit on that. So I guess seeing it move up here like this shouldn't bother me too much. But, you know, just because I didn't have the edge. So I did not want to download what? A DPC. Okay, here, let me type this. There you go. Anyways, it's your system is not performing normal. Put it that way, right? Like if I open up my NinjaTrader, now I'm using what is essentially the same as the bridge, right? Well, you saw it earlier. I could do it with NinjaTrader too, but I don't want to open one up. No, I will. Super DOM static instrument ZN, right? Almost exactly. They're almost like I can't even tell a difference, right? So if you're getting a lag where you can clearly see a difference between the two of them, this one ticks down and then this one ticks down, something's wrong with your machine. Well, I mean, you have nothing else running on NinjaTrader, then it's probably something on your machine. This is just not normal. They share like the same memory. Now, maybe you have NinjaTrader settings wrong, right? So I check these things like your update interval over here. There's also, if you go to options, there's also a market depth throttle. Make sure those are all the defaults. And if that you know still having problems, you can ask people in Discord, but it sounds like a computer performance issue, because you shouldn't be seeing that much lag with the bridge. No way. All right, I am gonna get going. What was I talking? I was talking about changing my focus. Oh yeah, well, and I also think I'm a little bit more focused on some of the infrastructure computer side of things right now. So. But maybe our time will come here where, you know, March comes around. Might be an interesting next 2 months, but then when March comes around and they do cut interest rates, things might flip around again, and then it could get interesting and we might be able to find an advantage there. You never know, right? So, I'll see you guys tomorrow.